It's February 1st, JLD here, and welcome to MSTR. Today in the Treasury Titans. Nothing in this video is financial advice. And just when we thought we were happy to say goodbye to 2025, which we were, now we're happy to say goodbye to January because that month was terrible as well. I mean, listen, Michael Saylor posted this because why? He is built for the long run, literally and figuratively. But guess what? You still get your face punched in every now and then. That's what's happening right now in the markets. An absolute gut punch. I mean, we're in the 76s right now. Absolutely insane. I mean, if you had told me, 150 days ago when we were at 126, that we would be down $50,000 per Bitcoin down to 76, I would have thought that was not possible. But here we are. And that's kind of one of the things. Bitcoin will always surprise you. It will always surprise you. I'm really glad that I'm DCAing, dollar cost averaging in at every one of these dips. I'll be dollar cost averaging in tomorrow as I do every single trading day. I did it for all of 2025, and I'm not stopping in 2026 either because, man, we're built for this. And it's painful, but we will survive. And Michael Saylor says, more orange. This man just keeps on buying. Right now, his Bitcoin is at basically the average cost. And that's where all the FUD's going to come out of, like, Michael Saylor is going to get liquidated. You could not be more clueless about life in general if you were to post or believe something like that. But you're going to see it everywhere. But guess what? Michael Saylor keeps buying more Bitcoin. So let's go. And CJ says, conviction breeds conviction. This is 2,000 days since Strategy adopted the Bitcoin standard. That's 2,000 days. Look at some of these dips that they bought it. I mean, this is a brutal dip right here for sure, of course. But I mean, they were buying down here as well. Let's just give Strategy some absolute credits. Chris says, I will continue to say it. MSTR is an IQ test and will expose your level of stupidity like nothing else. If you want evidence of how ignorant 99% of investors are about the company, you're seeing it all over X right now. The majority of narratives are completely detached from reality and have literally zero credibility. If you haven't done the work and spent at least 100 hours studying the company, I advise you refrain from having an opinion. And if you actually have some humility and curiosity and want to learn, I've done the work for you. And this is an incredible thesis guide for MSTR that Chris created. I highly recommend it. I've read it multiple times. I actually did a whole podcast episode of it. So very cool stuff. Just as I was predicting, by the way, I will give myself a little pat in the back because, during this bloodbath, I might as well give myself one little pat in the back. I was saying they're definitely going to be raising the stretch dividend to 11.25 because, listen, Michael Saylor, he just wants to be ATMing stretch. He wants to be ATMing it 20 days a month. Every trading day, he wants to be ATMing stretch. I mean, imagine if he was able to be ATMing stretch every day right now during this bloodbath in the 70s. This would be glorious, but he's not able to. So he has to keep raising the dividend rate, until it gets pegged at 100. That's just going to be what he has to do, and he is going to absolutely do it. So I'm looking forward to having my dividend rate increased by 2.7%. That's about what it is from the 0.25 bips increase. So next month, I'll be getting paid even more, and I will keep on tracking, and I hope you do as well. We have Jeff that says, dips will be bought. Yes, they will. All eyes on stretch for the next 15 days. 5.9 billion could be issued, and amplification would remain under 40% with Bitcoin at 78,000. And of course, now Bitcoin's in the 76,000s as of me recording this. Without padding the USD reserve, they'd also have 1.5 years of dividend coverage in cash. I mean, this is what a strong company looks like. Simon says, dips are transfers from impatient to patient hands. We hold because Bitcoin is sound money in a broken system. Onward. And yes, it is. And thank you, Simon, for sharing some wise words during these very difficult times, because they are difficult times for everybody. Strategy says today marks 1 full year of Strike and digital credit. This is 1 full year of Strike and digital credit. And Strategy Maxi says Strike will replace all growth income instruments. Strife will replace all long duration credit. Stride replaces all high yield debt. And Stretch replaces all savings accounts, which is why Stretch is the iPhone moment. And we have a great video clip of Michael Saylor coming up. But I just want to say before I sign off here that, listen, this is a trying time. As I said in the past couple episodes as well, we're not going to pretend this doesn't suck. This sucks. This is just the world that we live in right now. But here we are. This is the reality. What are you going to do now? Are you going to double down on your beliefs and your thesis? Or are you going to, what I think would be, fumble the biggest wealth generation, the biggest generational wealth opportunity of what could be our lifetimes? And that's why I'm doubling down on my convictions. I'm dollar cost averaging, bringing my DCA down. I never thought that I would be able to actually bring my dollar cost average down, but now I'm buying at below, or I started buying stretch at, MSTR at, now back in 2024. This is insane. So let's stay true. Let's stay strong. And here's our sponsors. Scams and identity theft do not start with hackers. They start with your personal data being easy to find online. Your home address, phone number, and employment history can be sitting on dozens of websites right now, waiting to be used for fake loans, targeted scams, or worse. That information is spread across people's search pages, shady directories, and commercial databases you've never even heard of. That's where Incogni comes in. Instead of spending hundreds of hours manually opting out of these sites, Incogni automates the entire process. They hunt down your data and demand its removal. Incogni doesn't just do this once. They continuously monitor these sites in the background to make sure your data doesn't reappear. I recommend the unlimited plan because when something isn't covered automatically, Incogni's custom removals feature lets you send in a specific link, and a dedicated privacy expert takes care of the manual removal for you, start to finish. Remember, if they can't find you, they can't use your data against you. Take your data back risk-free with Incogni's 30-day money-back guarantee. Use code MSTR for 60% off an annual plan at incogni.com/MSTR. That's incogni.com/MSTR. When you want more, start your business with Northwest Registered Agent and get access to thousands of free guides, tools, and legal forms to help you launch and protect your business all in one place. Build your complete business identity with Northwest today. Northwest Registered Agent has been helping small business owners and entrepreneurs launch and grow businesses for nearly 30 years. They are the largest registered agent and LLC service in the U.S. with over 1,500 corporate guides, real people who know your local laws and can help you in your business every step of the way. Build your business identity fast with resources, forms, and step-by-step guides even before creating an account. Sign up to manage your business hub with lawyer-drafted documents. Northwest is your one-stop resource, makes life easy, and keeps privacy automatic, never selling data anywhere. Don't wait. Protect your privacy, build your brand, and get your complete business identity in just 10 clicks and 10 minutes. Visit www.northwestregisteredagent.com/JLD free and start building something amazing. Get more with Northwest Registered Agent at www.northwestregisteredagent.com/JLD free.
Right? If the customer is happy, right? If the credit investor is happy, then we buy Bitcoin and that creates amplification for the equity, and then the equity has value. If the company can sell $10 billion of credit a year, and if we're capturing 90% of the economic benefit of the credit, okay, I just raised $10 billion. It's going to be worth $100 billion in 10 years. I just captured 90% of the benefit. I made $90 billion for the equity, right? Mm-hmm. I'm creating shareholder value by selling the credit. The equity value is the result, right?
That makes sense.
And so you're running the company for the benefit of the creditors. But it turns out that if we run the company for the benefit of the creditors, then the demand for the credit increases. and the stability of the credit increases, right? Do you want it to trade with a vol of 1 or a vol of 10 or a vol of 20? When we didn't have that USD reserve, Bitcoin crashed.
Yeah.
And STRC went from $100 down to $92. And then everybody chatters like maybe they can't pay the dividend, right? And so then we put $2.25 billion of cash on the balance sheet. And now you're like, well, for the next 3 years, they're going to pay out of the reserve, even if they can't raise equity capital. So all of a sudden that strips the risk. If you strip the risk, you strip the vol. The volatility of STRC, it spiked to 19 after that crash. And now it's working its way down to like 7. It's been falling, and it should fall down to 5 or 4 or 3 or 2 or 1, right? So our operation is to strip the vol, and to strip the vol, we have to strip the risk. And to strip the risk, it means that we have to put some cash on the balance sheet. And in the near term, that's slightly dilutive to the equity. Instead of a BTC yield of 27%, you might have a BTC yield of 23%.
Yep.
But at the end of the day,
that's because you did the ATM to do it, and obviously didn't buy Bitcoin.
Because we sell some equity and we buy cash instead of buying dollars.
Yep.
So it's near term somewhat dilutive, but on the other hand, the market was valuing us with a P to E of 1. Like they were giving us a premium of 23% again, or 25% against a BT yield of 25%. So the market gives you a P to E of 1. So the market doesn't believe you can keep doing that anyway. Okay, so you got to ask the question, well, if the company never sells any credit again for the next decade, then what's the what's the yield going to be? Well, the yield's going to 0. And so the company trades. If the company doesn't sell credit, then it doesn't matter. So what you want to do is not try to maximize the BTC yield with an expectation that it's a 1-year thing. What you want to do is create a business model where you can generate a consistent BTC yield for the equity investors for the next decade. So like we'd be better if we generated a 10% yield every year for 10 years, then maybe get a P to E of 10, and then you trade at a premium of 100% to your NAV, you see. That's better than a BTC yield of 25% with uncertainty about how you're getting there.
Totally.
Right?
That makes sense.
Yeah. And the challenge that some of the Bitcoin treasury companies have is if you're just selling equity, there's an uncertainty about how many years you can continue to generate yield just by selling equity, which is why you want to look at an operating model, which is, some kind of financial instrument or some model where you generate consistent yields through an operating business, an insurance business, a banking business, a derivatives business, a financial activity, a credit business, et cetera. So what we're doing is creating a digital credit vehicle, and you look at the company going into 2026, and you've got $2.25 billion of cash, you got $60 billion of capital of Bitcoin. Okay, you got $63 billion of capital. We should reasonably be able to sell a dime worth of credit for every dollar of capital.
What's the second best? There is no second best.